On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. You gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again. Back at it again for another episode of Future Financial Strategies. Today, we are going to be talking about diversification, something that I don't believe in. I do believe in diversification strategically. We're going to break it down. Before we get into it, let's talk about hitting that like button. This is your reminder at the beginning of the video, obviously, to hit the like button. Those of you who've been here more than twice, go ahead and officially join the Wolf Pack and hit that subscribe button. Also making sure to hit the bell notification next to the subscribe button and making sure to click that, and then it'll give you a drop-down menu and make sure you have all on. I do not flood the feed. I'm only giving you the information you need, or that I think you need, or that I want to give, whatever. We're going to jump into it. So diversification, I've said it multiple times. Nobody gets rich diversifying. How do I know this? Well, I can only go based off of what I personally see. Now, me personally, I am around a bunch of wealthy people. It's part of my career. I work in home automation, $1 million and up houses. So at minimum, basically everyone that we deal with has a minimum of $1 million net worth. They are millionaires, multimillionaires. There are a couple of billionaires. I've been doing this for 12 years. So I've got a pretty wide swath, at least in the area that I live in. Now, it might be that just in the middle of the country, the diversifiers aren't here. Okay. But the reason I say that is because when you talk to these people, it's like, oh, like, how did you amass this? Like, how did you get here? Not one single person to date has stated, oh, I just bought the S&P 500 and diversified and bought 500 different stocks. And like, that's how I got rich. Literally zero. Not a single one. Yet to date. Now, I understand that there's a lot of super wealthy diversifiers on YouTube. I know that there's a lot of people on YouTube who posit that they're just wealthy in general, and I don't believe them. The internet is a highlight reel. That doesn't mean that they're not giving good information. That doesn't mean that they're not giving strategies and tactics that are useful. It's just, if I don't see you actually putting your money with receipts and it's just a spreadsheet that you make up that you can edit with some drop-down menus on it, it's not as believable as, you know, showing the actual receipts, showing the portfolios. And I'm just going to leave it there. A lot of people can say anything. A lot of people have not been active in the crypto market or active in the stock market for that matter. There are very few people that show the receipts, and kudos to those who do. Kudos to those who are putting out good, positive information, even if you're not showing the receipts. It's just, I don't believe you as much. Just saying. Like, I mean, I can take it and ingest what you're talking about into my system. And once I see it work with my money, cool. Pops, I'll give you your flowers. I always cite where my ideas come from anyway. But not seeing it makes it a little bit less real, because anybody can get in front of one of these microphones right here. Anybody can get in front of one of those and just start talking. I'm sitting in front of one just talking. And I'll be the first person to tell you that, like, this year, the way that things are going with the portfolios, we actually might have a 6-figure year, which is cool. But like, most of that's going to be on me. And up until this year, I have not made over 6 figures in a very long time. Since I had one 6-figure year in crypto, like one spike. We had one highlight year on a run where we got lucky, hit a lane, and I was doing what I do. And that is not even possible unless you have a lot of money already in crypto to do anymore. So we're not making 6 figures every year. I don't just have hundreds of thousands of dollars laying around. Like, you guys have seen us roll out the portfolio. When I get cash infusions, it's because I've gone and done some extra work. You know, there's nothing that's going to replace hard work. You can work smart. The person who works smart and hard is going to be ahead of you in perpetuity forever. You're not going to cheat your way to winning. There are no shortcuts. This has been a long journey. I've been talking about it online for 2 years. It has been probably about 20 years since I decided I was going to take responsibility for my financial success and my financial future. And 10 of those years were just getting ready for the opportunity. And then 10 years after the opportunity presented itself is where we get to where we are now. I've been in the Bitcoin space since 2013. So I do have over 10,000 hours in that. That doesn't make me an authority. We're all still always learning, but I do have some opinions because I've been doing this actively for quite a while. I've made money, lost money. Still here as somebody who works a blue collar job. It's a little bit different for those people who had hundreds of thousands of dollars to throw into crypto. I started off getting into Bitcoin with change. And I mean, literally like 10 cents here, $1 there, what's left over after managing the bills, because I was up to my eyeballs in debt, and literally clawed my way to where I'm at now, which is a pretty nice spot. Like, it's not bad, but it's not where I want to be. It's not where I'm capable of. So here we are. We're doing some documentation now that stuff is starting to roll. We got the law of large numbers working in our favor somewhat. And yeah, so we're starting to, we're using all the tools. And one of the things that I've had to dial back on is this ideology, because you get into these financial cults that there's only one way to do things. Oh, you just do this, and this is all I'm going to do. Oh, I bought Misty. I'm going to just buy Misty and just keep stacking it indefinitely because it's the best thing ever. And it's like, it's the best thing ever for what it's meant for, which is income. Probably good probability. It's not the best thing ever for growth. Like, it's just not. You're not going to outgrow the underlying stock. It literally says in the prospectus, for those of you who read those, that it is designed to underperform the underlying stock, which is MSTR, which means that, like, if you want growth, you have to have MSTR itself. Misty is just income, which is cool because income is an issue. I mean, that's kind of the first problem that most of us run into is income. It's I don't make enough money. I don't have enough money left at the end of the month. I'm up to my eyeballs in debt. I can't pay these bills. Managing this stuff is hard. I don't make enough money. That's part of the problem. Some of it is going to be your spending habits and your relationship with money, the way that you look at money, what you're doing with your money, the decisions that you're making. I know plenty of people, and I'm gonna call it out. Like, they're mostly women. I don't see guys do this, but like, also, I guess when I'm on social media, I don't really pay attention to dudes, so that could be why. Maybe I just don't see it if those guys exist, and shame on them too. But it seems like these chicks will work themselves to death to get enough money to go on these extravagant vacations and then ride that vacation picture high the rest of the year, letting people know that they did something. And they're broke. They're brokies. They're doing the bare minimum. They're hoping they're going to be able to retire, and they're going to be really upset because they're going to be tired by the time that they get ready to retire and find out that they can't, because they've been doing the bare minimum, and the system's not set up for them to win at that. And they prioritize that vacation over everything else. I talk to people about it all the time, because I'm not a big vacation taker. Like, I'll thug it out until I get the extra day off. Shout outs, happy Memorial Day. That's when I'm recording this one. And I'll just grind it out until then. Like, if I don't have somewhere to go, which is normally business related or a reason to be somewhere, I'm not anywhere but work and the gym. Those are the things that I do. And people are like, why is that? I'm like, because in 27 months, I can do whatever I want. And for me, if I'm going to go on vacation, I want to go on forever vacation. I want to go on vacation on my terms when I feel like it. I don't want to go on vacation once a year and have to work till I'm 80 and be tired and have my bones hurt. That sounds horrible to me. The prospect of doing that versus just putting your nose down and, like, you know, I have plenty of fun outings. I'm really bad at social media documentation, so y'all don't know it, but I have fun when I go out and do fun stuff. Enough to get me through this week. Like, I don't see the need to spend all of my money to go on a vacation to look like I got money somewhere else for a bunch of people that already know that I have more money than them because I'm an American. Like, it's just what it is. Because they're not going places where it's more expensive. They're not going on vacation to Dubai. They're going on vacation to borderline third world countries where our dollar stretches, and as an American, you're just rich. in that ecosystem for those 2 weeks that you're there, for that week that you're there. And then they come back and they're broke again because plane tickets are expensive. And then they normally overspend while they're gone because they want to do all the extravagant stuff and feel like they're wealthy. Then they come back and they're poor again. And the whole cycle starts over, saving up for the next vacation. That doesn't sound fun to me. Like, if I'm not paid to be there, I don't want to go normally, unless it's a celebratory thing. And those are few and far between. Like, I have a vacation coming up, like an actual legitimate vacation coming up at the beginning of next year, beginning of 2026. That's going to be a vacation. I'm going to be gone for a couple of weeks. And honestly, it's the first time I've been gone for a couple of weeks in a long time. Like, a long time. It just, the priorities are not there for me for that. Like, I want to build, I want to do stuff around my house. Like, I got other projects. I have things that are important to do. I don't want to sit down. Now, that's just not how I'm wired. For those of you that are wired that way, that's cool. But like, it's also coming at the expense of you having to work indefinitely forever. And then when I'm not working, you're going to say that, oh, I did something nefarious to not have to do that. And like, it's like, no, while you were on vacation, I was working. While you were taking pictures and uploading them for the gram, I was working. You don't deserve to be on the same schedule that I'm on because I worked when you weren't working. I just outworked you. I worked hard and smart. So like, oh, the whole time I've got the portfolio going, once it gets enough to like to match my check last month, or actually it's not last. Well, by the time this video shows, it will be last month. So like last month, you guys saw the end of month report. We beat out our W-2 income first month. And most people the vacation people would be like, oh, well, I'm gonna work less now. I'm gonna dial it back now. Why am I going here? I might quit my job now. I beat it 1 month. There's no guarantee I'm gonna beat it next month. That's the reason for me to leave. I have an exit criteria for when I can stop going to work, should I choose to. And I'm gonna do a breakdown on exactly what that is for me, because I think it's different for everyone. People give you these arbitrary numbers. You got to be a decamillionaire, or you can't say that you're rich. And I'm like, well, if you got to go to work and you're a decamillionaire, and I don't have to go to work, and I'm not a decamillionaire, and I get to do what I want with my day. And the only thing that you can say is like, oh, well, like if I want to eat lobster 4 times a day, like, well, you're an idiot. Like nobody eats lobster 4 times a day. Like, are you stupid? Like, that's just a dumb metric to live by. Like, oh, I can just blow money and it doesn't matter. I can get 18 Versace robes. Like, I can get 1. Okay. How many robes can you wear at a time? Honest question. Are you filthy? Do your robes get dirty? So how many do you need? Okay. So that's a different conversation, which is why I say that like these arbitrary numbers that people throw out are exactly that. They're very arbitrary because most people don't know what it actually takes to not have to go to work because they don't sit and think about it. Because it's easier to just write it off and be like, oh, arbitrary number. I'll never save that up. I'm just going to go on vacation once a year because I'm not going to have $10 million. Well, I'm going to be at work optional / retired before I hit the millionaire mark, and I will hit the millionaire mark. Like, that is one of my goals. It's an arbitrary goal, but it was an arbitrary goal that I gave myself when I was 16. I'm going to do some of the stuff that I said I was going to do when I was 16. Like, that's part of I got a list of stuff I want to do. Being a millionaire is one of them. So, but to not go to work, to not have to go to work every day, to not have to clock in and be in charge of my time, that I can do without $1 million. I can. Now, I understand that's not for everybody, but I can. So, like, I really don't care what race you're running if I can win my race. Like, I don't have the same situation as you. I don't have the same needs as you. I don't have the same level of vanity as you. Because it's funny, these people that sit there and they talk about money constantly. Oh, it's just, you got to have this. Oh, you get into an argument on the internet. First thing you talk about is you're broke. Like, you're out of shape and dysgenic. Like, let's talk about it. Like, why do you look like that? Oh, it's because you don't take care of yourself? Like, okay. Arbitrary, right? Yeah. You're going to have to use a whole bunch of that money to stay alive now. Congratulations. Like, it's a whole picture. We got a whole life that we live, people. But so I rag on diversification all the time, but I do believe in it, and I do believe in it strategically. And I tell people all the time, I'm like, I will worry about diversifying when I'm rich. Well, the reality of it is there's a little bit of a way for me to diversify, because there is one thing that I have implemented that I haven't implemented. I am systematically implementing it within all of my portfolios. And it's one of the things I learned from Wall Street Trapper. Shout outs to Wall Street Trapper. Like, you got to give credit where credit's due. He's great in his lane. When he talks about crypto, completely loses his mind because he's wrong. He just doesn't get it. But like the TradFi guys don't get it. That's not his lane. He is amazing at what he's at. And some of his portfolio stuff, even though I do stuff very differently, and I mean, we could probably have a really good conversation about the dividend stuff, because I do feel like I would say that I'm a really good capital allocator. I'm not good at options. I go to him. That's who I defer to about that. But I have a few other people that I defer to about options. But I'm like, as far as people that I've seen the results of their stuff, their results of their portfolio, he's constantly giving receipts. He's part of the reason that when I started talking about this, I didn't want to talk about it anything in a fashion that I didn't have receipts for. So that's why I look at things the way that I do, because like I know that he knows what he's talking about with his options trading, because like he shows his trades, he shows what's going on, he shows his actual brokerage. So there's that. But one of the things that he said that really resonated with me was the cash reserves. And I'm real bad about that. I deploy everything. And it's because I'm a brokey. Like, I'm out here just like you. I go to work every day. I'm working 40 plus hours a week. Actually, honestly, 40. If I only worked 40 hours a week, that would be wonderful. Between that, this side hustle stuff to try to get more income in so that I can invest, it's more around 60, I'd say. And I've dialed back to 60. It used to be 60 to 100. And yes, 60 to 100. I was Ubering outside of my job that I was working 50 hours at. So you got to do what you got to do. You got to work hard. Like, you're not going to cheat the system. There's no matrix hack to get out of this. You got to work hard, then be smart, then know when you can leave. And we're going to do the video on that. And I'm just going to use myself as the example on how I am planning to transition out. It's an exit strategy. And if you don't have one and you think that at some arbitrary number, you're just going to be able to call it with no clearly defined rule set for when you leave or how that's going to look, you're probably not. But I don't like holding cash. I also don't like holding the S&P 500, honestly. Like, I don't want to ride that wave either, because when things go down or things get sideways or get hairy, I don't understand it well enough, because I am 100% locked in, laser focused. High yield dividends. It's either, my rule set is, it either pays high yield dividend, which means you're making an accentuated amount of income, or you're potentially outpacing or at minimum keeping up with Bitcoin. Because otherwise, I could just buy Bitcoin and hold it myself. I'll be doing a video on why I diversify out of Bitcoin. Now, we do things that touch it. We're going to be making some more adjustments as we're getting through these first phases of my portfolio. We're actually getting close. We're within a few hundred shares of hitting our 2,000 share target for Misty, which for me, that's the target. I understand people are out there with like 10,000 shares, 3,000 shares, whatever. For me, 2,000 is what I want in Misty, because I don't want to just hold Misty. Then we'll be moving on to our next positions, which as it sits right now, we're looking at a 50-50 split between IMST and PLTY. I am looking at IMST to see if they have the ability to defeat NAV erosion like Misty does, because their first initial payment, $7 payment, was amazing. Made me wish I bought more. I should have been keeping my ear a little bit closer to the ground in regards to what that payment was going to be, because I did not realize it was going to be as what it was, or I would have rolled a chunk of my Misty shares probably into that position. But we'll see if we get to see if they recover the NAV on that, because that's a big payout. It definitely took a dip. Fortunately, we had a little bit of exposure, not as much, even close to as much as I would have liked. But we'll see. We also have MST in the runnings for seeing how that goes. With the volatility, it's in my active portfolio, but I don't know that I want it in that much work going on in my primary portfolio, because the position size would be larger, which means the swings would be more erratic. But LFGY for the weekly as a filler in between my other positions, we're here for it. So what we're going to talk about today, I'm going to go ahead and pull it to the screen. We're talking about the boring side of diversification. So this is the safety, and I'm specific about the cash reserve because it allows me to have that portfolio stability, have that kind of anchor, utilizing Strike and Strife from Strategy, formerly known as MicroStrategy. So the first one we're going to talk about is Strife, which is MicroStrategy's 10 perpetual Strife preferred shares Series A holding. Now, what Strife is a Series A perpetually preferred stock, often pronounced Strife. Well, sorry, reading the definition here for you, because I figured why not get the best information possible. It's a novel financial instrument issued by Strategy, formerly MicroStrategy, designed to bridge the traditional fixed income markets and Bitcoin exposure. It offers a perpetual 10% fixed dividend paid quarterly, with payments funded by a company whose core asset is a massive Bitcoin treasury. Strategy. Now, I've heard a couple of different ways that this has been explained, because they say it's 10%, and it was 10% based on $100 a share. So it's $10. I've heard it explained that it's a flat $10 no matter what for Strife. Like, you're getting $10 per share. It's like simple math. And I'm not sure, because like I heard that from an interview that the CFO for MicroStrategy was on, and he said multiple times it's $10 a share. That's what they're paying. It breaks down to 10% because they're looking at it being $100 a share. So saying 10% makes it easy math for people. It's $100 a share, you get $10. But if it's a flat 10 no matter what, when it's at $90 a share, you get a little bit above 10%. The reason that is interesting is because I try to buy it at under $100. I'll buy it at 100 because it's not that big a deal, because like that's the peak. But like if it does dip a little bit, like I bought some shares between 190 and 95. I've seen it at 97. Like it's not necessarily that it's almost like it tries to be pegged to 100. Some of the key features for Strife. It's 10% annual dividend, which is questionable because they've said it's $10. If they're trying to keep it pegged to $100, and that makes sense. Otherwise, if it's below $100 and you load up, then you're getting $10 a share when it rolls around to being paid out. I mean, that might be something that I might shoot them an email and ask. As a shareholder, I'm kind of wondering about that myself. In regards to seniority, it's senior to common stock and other preferreds like Strike in a liquidation event. So like there's very low risk on this, because if the company ends up getting liquidated, worst case scenario, you're higher in the priority tier than the 3 other issuances of stock. From a redemption standpoint, the company can redeem shares under certain conditions, e.g. tax regulatory events, or if outstanding shares fall below 25% of issuance. Dividend escalator. If a payment is missed, the rate increases by 1% per quarter up to 18%, which means that if they do not want to pay back every single quarter. The board can vote and elect to not pay back, but then it compounds the dividend. So if they don't pay you one quarter, then your dividend goes up. So now it's 11% with the 10% next quarter. So like it scales up per quarter up to 18%. There's no crypto custody. Investors do not need to hold or manage Bitcoin directly. Use of proceeds primarily to acquire more Bitcoin and for corporate purposes. But as we know, strategy, every dime that they get, they're kind of like me. They're focused on getting Bitcoin or setting up to get Bitcoin, which is the way that I look at it. My income portfolio, getting our income to a healthy state to where we're in a work optional space, gives me the ability to double, triple, quadruple my income and just have that go straight towards building out my investment portfolios. And we're trying to do that as fast as humanly possible. Like there's just no reason for me to not be doing that at this juncture. Like if I'm not working or working out, like what are you doing? Like there's a little bit of time for fun, but fun is not the priority. The priority is to get to a space where I can have as much fun as I want for as long as I want in perpetuity. That's the goal. So the potential risks of STRF, sustainability of the dividend, the 10% fixed dividend is high. Now, this one I do not agree with, but it's one that they talk about as a risk all the time. It's because the underlying asset, Bitcoin, is not understood by traditional finance. 10%, this is 20% lower than what Bitcoin's hurdle rate is, which right now it's even above that. And they're talking about as Bitcoin calms down, we're looking at a 20 to 30% annual percentage yield of growth on Bitcoin itself. 10% is 20% below the 30%. And right now we're sitting at 60. So questionable. Reliance on Bitcoin, the company's ability to pay the dividend is ultimately tied to Bitcoin's price and liquidity. A severe, prolonged Bitcoin bear market could strain asset coverage and dividend capacity. Bitcoin, just for the record, before strategy is in trouble, Bitcoin has to go to $30,000. And honestly, I'm pretty sure Michael Saylor said that they could sustain that. Like, they're not worried about ever like packing it up and calling it or having an issue where they're going to have to sell some until Bitcoin's down to $5,000. So that's also, I mean, for me as an investor personally, I am relying on Bitcoin. So I guess again, diversifying within the Bitcoin ecosystem, but that's not an issue for me. Now, if it's an issue for you, then that's different. But also, if you're inking your toes in and you're maybe a boomer or somebody who's just only knows traditional finance and you're looking for that Bitcoin exposure, but you're not trying not to really escape the matrix because this is still within the ecosystem. Like you're not self-custodying. You can't pack your STRF up and leave the country and be good. The government can still get in between you and your accounts that hold these. But, Bitcoin's going up and everybody's making money. So like, why would you not make money also? Right. So this is an easy way to get this is probably on the risk tier for Bitcoin. This is the lowest risk option there is. It's basically a bond. It's stable income. I know that a bunch of my retirees, the boomers, you guys get this. It's good income. Like that's just what it is. It's like, hey, this newfangled thing that you don't understand, here's income from it. You're optimizing for income with this. Regulatory and tax risk. As a hybrid between traditional crypto finance, STRF could face future regulatory scrutiny or unfavorable tax treatment, which these are basically function as bonds, not very much of a risk unless they change the status of what these products are. Redemption risk. The company can redeem shares in certain scenarios, potentially limiting the upside or liquidity for holders. Well, I think that's a risk with anything. Perceived Desperation. Some analysts view the high yield offer as a sign of financial strain, drawing comparisons to risky hedge fund strategies of the past. Well, I mean, was there a risky hedge fund strategy on gold? Well, gold doesn't appreciate as fast. I mean, there's nothing comparable. They're literally using the funds to just buy Bitcoin. Like, I don't really know how risky that is unless you believe that Bitcoin is going to fail, which people do. That's the reason there's a whole bunch of people that consistently short MSTR stock, because they believe that Bitcoin's going to fail. I mean, they've just been wrong for the past 15 years, but more power to them. Talk with your money and like get out there and play the game, because I am short squeezing you indefinitely in perpetuity. So pump my bags, whatever. No equity upside. Unlike convertible preferred, STRF does not convert into common stocks, so shareholders do not benefit directly from equity appreciation. This is just cash flow. Just cash flow. On the advantages side of things, it's high yield, so it's 10%, which honestly, for us, for those of you who follow this channel, you know that that's not high yield for us. But it's good. It's better than most things. And also, they're at 10% for us. That is a safety zone. It's funny looking at this with the way that I am in this market and the way that my portfolios are set up, that it's like people say 10% is high yield. And I'm like, okay, like, no, it's not, but okay. Yeah, it's an interesting corollary just compared to what we do. So like, this is a safety zone high yield asset for us. It's a high yield tool. Seniority. STRF's holders are paid before common stock shareholders and other preferreds in a liquidation event, offering a degree of capital protection, which means that like very low risk. Asset coverage. With the large and growing Bitcoin treasury, STRF is structurally over collateralized as long as Bitcoin's value remains robust. Tax efficiency. Dividends are treated as qualified dividends, potentially taxed at 0, 15, or 20% at the federal level rather than ordinary income rates. Now, see, this is one of the things that I'm liking about this is you get that on that tiered system, you get the qualification for the lower tax treatment. So this is a more tax efficient position. No duration or reinvestment risks. Perpetual structure means no need to roll over or reinvest at lower rates. Holders can collect yield indefinitely. Another good thing. It doesn't change. This is as close to set and forget as you can. Like, this is definitely a position, since it's going to be a cash basis for my portfolio. It's one of those positions where you turn drip on and look away and just keep adding to it. This qualifies for that for me, because I'm like, hey, these positions are just going to be what they are. And, you know, outside of every once in a while, if there's a black swan event and we need access to really quick capital because we've used everything else, it's like, okay, cool. We've got these pools here to tap into for a little bit that we're going to have to repay back. Bitcoin exposure without custody. Obviously, if you're lazy, you're getting exposure to Bitcoin, not necessarily the capital appreciation, but you are getting to monetize on top of Bitcoin. You're monetizing that in a safer fashion, because Misty, you have these violent swings. Price goes up, price goes down. MSTR, price goes up, price goes down. That is one of the drawbacks for people when they look, because they're just like, oh, your portfolio's in the red. And I'm like, well, the cash flow is good. Like, but yeah, people don't like watching numbers go down. As far as having these sitting there, like, they don't fluctuate that much. So you're not, even if it's red, it's like down $1, something like that. Like, it's not horrible, like where you're down 30 million% and you're just looking at bedlam in your portfolio waiting for the prices to go back up. Escalating dividend. If they miss the payment, it escalates. It's pretty interesting. use cases in a Bitcoin focused strategic portfolio was one of the things that I really wanted to break down because all of my portfolios are Bitcoin focused. We'll have a little taste of other stuff in there, but my core thesis is Bitcoin. So the majority positions are Bitcoin related in all of my portfolios. Yield enhancement. Strife offers a way to boost portfolio yield while maintaining indirect Bitcoin exposure, appealing to yield-seeking investors wary of direct crypto custody. I am not wary of direct crypto custody. I am way down the rabbit hole on that. But what this does is it puts something that is not as volatile, which for me, it's boring. It's not spicy. It's not something that you get hyper about, but it's a good position to set, drip and forget, drip and walk away. Just keep buying it, keep putting a little bit in there for the cash reserves. That's what we're looking at it for. The next one we're going to pull up. Oh yeah, I guess I forgot. Price on this is $100.15 as of recording. This obviously is off hours because it is being recorded on Memorial Day. So there's that. The next one we're going to look at is the counterpart to this, which is Strike, which is sitting at $100.99. Strike is a... Okay, hold on. Okay. Is the MicroStrategy Perpetual Strike Series A preferred stock. It is a financial instrument issued by MicroStrategy to fund its Bitcoin acquisition strategy below. Okay, so let's talk about the key points here. So what this is, it's like Strife, but you get a little bit of the upside. That's the best way that I can explain it. So this is like levering up a little bit. So Strike is just pure income play, minimal amount of volatility. The price is normally the price. They want to keep it at around $100. Functions like a bond. You get your dividend. No upside. It's just what it is. Just pure cash play. Just cash. Strike, on the other hand, you get dividend, but you get 2% less. It's 8%, which is still, I mean, as far as traditional finance is concerned, still high yield. But you get some upside in regards to the Bitcoin exposure via how MicroStrategy performs, which is pretty cool. I kind of dig that. It's like you get income, but a little bit extra, a little bit of spice in there for you. This is for the people who are extremely conservative, but trying to be a little bit aggressive. Like if you're sitting in and you're a bond investor, because bonds are garbage anymore. The currency is getting debased. Bonds are terrible. Most states, I wouldn't buy their bonds. I wouldn't buy the U.S.'s bonds right now. Like I would, honestly, this is as close as I get to that level of boring because you're technically, the interest rates are so low that you're not even beating inflation. So like you're just losing money buying bonds right now. Like they're not beating inflation. They're not good products. Like I don't know what else to say about it besides it's garbage. And if you're going to have your money working, it should be working as efficiently as possible. And there is just not much of a case for bonds being the most efficient thing to have your money sitting in from a safety perspective right now. Like if you're trying to outpace inflation and have your capital actually get some level of growth. Like, because before, the way that I was told about bonds growing up, it was like, hey, like you're just trying not to lose. You buy bonds. And it's like, okay. But at this juncture, if you buy bonds, you're losing to inflation, which is like a big L. It's like keeping money. You might as well keep money in your savings account then. If you're going to do that, like just put your money in your savings account, call it a day. That's what you're getting if you're buying bonds. So the key characteristics of Strike is the structure. It's a perpetual stock with an 8% annualized dividend based on $100 liquidation preference. So this one actually is most likely also just $8. I think that's the way that they did this, because like it says based on $100 liquidation preference. So this one pays $8 a share. I'm gonna do the simple math there. We'll say it's $8 a share. The purpose is to raise capital to buy Bitcoin, obviously, strategy. Dividend flexibility. Payments can be made in cash, MicroStrategy common stock, MSTR, or a combination, reducing the immediate cash outflow pressure. I like that. I like that. This is a good position that you could get into, and you could end up with some cash. You could end up with some MicroStrategy stock. It's like, in my opinion, that's a win-win. For those of you who are MicroStrategy holders, this is also a very good tool to be utilized in regards to doing that, because you can get a little bit of extra MicroStrategy stock thrown at you. The strategic advantages, obviously, Bitcoin proxy, yield generation, 8% dividend provides 8% dividend provides income compared to Bitcoin's lack of yield. So like if you're just sitting in Bitcoin, you don't get anything. Like I talk about that all the time. I just don't have anything to do with my Bitcoin besides look at it once a month, make sure that it's still there, and tally up my net worth to see where we're at versus where we were. Just doesn't do anything. It's kind of like a block of gold. Capital structure priority, ranks above common stock. So you're in second place. The people who hold STRF are in first place in a liquidation event. Strike is in second place. So everybody who holds STRF gets paid first. Then you're next in line for holding Strike. ATM program, MicroStrategy can issue up to 21 billion in Strike via the at the market sales, ensuring liquidity for ongoing Bitcoin purchases. So like you always have more opportunity, like because Saylor's already stated he's going to continue buying Bitcoin. So there's always going to be some to buy. Obviously the risk that they state, again, Bitcoin dependency, not an issue for us. Dividend sustainability, also not an issue, as long as you have faith that MicroStrategy is going to keep buying Bitcoin. Bitcoin's going to keep going up in price. There's always going to be, as they expand out, they will start. I mean, if Bitcoin's constantly going up, then like it's not hard for them to. They're outpacing the loans. As long as Bitcoin doesn't go to $5,000, we're good. Like we don't have anything to worry about. Regulatory scrutiny, unless they're gonna start cracking down on bonds, I'm not really worried about it, because they're using the income, how the company uses the income, unless they say that companies can no longer buy Bitcoin. Then what else are we going to do? Financial health. They're stating the negative earnings report, but that's before FASB kicked in. The growth on Bitcoin, they've made so much money in growth on Bitcoin that is not a concern for me personally. I mean, obviously do your own research, but they're holding a ton of Bitcoin. They got it at a really good price. They're dollar cost averaging. The price keeps going up. Again, numbers that I worry about, 30,000 and 5,000. And we haven't seen those numbers in quite some time. And I would posit that it is very unlikely we'll ever see those numbers again. So again, these are both very good products in my opinion. I've been doing a lot of research, and I've decided that I'm going to start utilizing them for my cash reserve positions, because again, shout outs to Wall Street Trapper. I am trying to have my portfolios be a little bit more mature, if you would. Like I'm starting to get more money into them. And like, I'm just like, well, there's no better time to start than now, because I'm usually 100% deployed and I go hunt to go get more capital. And it would be nice if there was just a ton of capital in there, and that was something that I was regularly doing while the times are good, if you would. And then have that money still working, but working in a fashion that is a little bit more efficient. in the sense that like it is in alignment with what all my portfolios are doing, which is generating money or massive growth. So what I'm doing is my cash positions, I am looking at getting into a 5 to 10% cash position. I'm going to, starting in August, be focused on, along with paying off the debt, I will be focusing on getting my portfolios dialed into the positions that they need to be. I want to close out the year of 2025 with at minimum a 5% cash position in each portfolio, if not 10. I don't think I'll go above that for the portfolios, but I mean, that's going to be probably about, hopefully I'm looking at trying to get those portfolios to about 50 grand. Not a piece, but my income portfolio should be sitting around 50 by the end of the year. So that's 5 grand at tops, 2,500 in the worst case scenario. Just sitting in those positions. And I'm doing it across the board with all my portfolios. So the Robinhood portfolio, even though it's all weeklies, I will start buying a little bit of either Strike and Strife. I'm probably going to use Strike mostly for that. In some portfolios, it might be a 50-50 split, but probably going to use Strike. I'm a little bit more aggressive, and I just don't like idle money. I don't like idle money. So that's what we're looking at doing. So expect to see it. We'll definitely have the conversation in the Robinhood portfolio because it'll be the only thing that's not a weekly payer, but it'll not be a weekly payer for a reason. So that's how we're doing it. I hope you guys got some value out of this. Let me know down in the comments what you think. Am I crazy? Am I on? Am I off? What are your guys' insights into it? What do you guys think of Strike and Strife? I'm looking forward to hearing from you guys. It's your boy Reckless Ray Dinero, and I want to remind you, hit that like button on your way out if you haven't yet. And if you did enjoy the video, definitely go ahead and join the Wolfpack. Hit that subscribe, hit the bell notification, turn all the on, and most importantly, for my Wolfpack members, share the video with your communities because we're not trying to get rich over here by ourselves. It's nothing honorable in being the only person eating at your table. Till next week, people, it's your boy Reckless Ray Dinero, and we are out.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.